Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I am your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you, buddy?
Hey man, doing great.
We are here to give you the boots on the ground experience, knowledge that you need to become a very solid, experienced investor here in our town. Please like and subscribe to our Investor's Guide of Memphis Real Estate on the YouTube channel, Facebook, Spotify, wherever you listen to your podcast. Show sponsors are listed on your screen below there. Triumph Construction, Corland Financial, CrestCore Property Management, Will Griffin with Griffin, Clift, Everton, and Mashmeyer, and Local Title. We're happy to have those guys with us. I help buyers and sellers every day, guys. If you have any questions on selling or buying anything in Memphis, shoot me an email, dean@crestcore.com, and I'll be happy to help you with that. Today's podcast, We're going to get into a little bit of Q1 market update for 2024.
Yes.
We do an annual zip code breakdown to where we give kind of sales numbers for the entire year. Market update, I generally like to keep it kind of broad stroke. Let's just talk about kind of what we're seeing. The most popular topic that we've come across in the last probably 12 months is the interest rate.
Oh, if not 24.
Yeah.
Maybe 30. Yeah, definitely 24 months.
And I think we're probably going to be looking at it again for another 24 months as a center focus on what we're doing.
That's true. That's true.
You're going to be paying attention to that.
Yes.
You know what I mean?
Yes.
You're not, prior to this increase, we were all just like, oh my, it's low.
It was low for a long time. Right. Yeah, that's right.
So I think we're going to be considering it, thinking about it as we go on for the next probably couple of years. I don't see any real change, massive change that allows a new buyer pool to come in or allows a seller to get a lot more money for their home. I mean, we're going to see, I think the feds, and I know your thumb is on this, but I believe the feds have said we're going to see 2 or 3 cuts this year.
We're going to see cuts this year.
Yeah.
And next year.
But
so
how much
is it
when?
1 or 2? Is it 3 or 4? Does it roll into next? I mean, I doubt it's going to be 4. Is it 1 or 2? Does it roll into next year with another 2 or 3?
Yeah.
So they've got their famous dot plot.
Yeah.
So where they do their little screens of their little where they point where they want interest rates to be, where they forecast, anticipate where they think the rates are going to be, and everybody's moving in and out. In long term, they have them going down, or the next couple of years, they have them going down. Everybody on the Fed Board of Governors, the people who make the decision, all believe that the rates are going to go down.
I read something the other day that said, and I don't remember, but that the Feds usually on an election year do not lower or raise the rates after about July. So that's been historically the way it's. That doesn't mean it can't happen this year. So if if things hold true to pattern, we might see some in the next couple of months.
I don't think anything's expected right now before June.
So to me,
maybe they'll get 1 in there on your kind of experience. Maybe get 2, and it's going to be a quarter point. So it's not.
That's what I'm saying.
Max, I think you would see if assuming things are like they are and there's nothing crazy that happens, 75 basis points or 3/4 of a percentage point would be the max I think anybody would project. Maybe a 1/4 of a point. I think everybody expects at least a 1/4 of a point.
Yeah. And that's not moving the needle for buyers.
It doesn't seem like it.
Oh, it won't.
Yeah. Oh, no. But I think as you'll talk about it, is people have gotten used to it. People who have never bought before don't know any better.
Yeah.
Don't know any different, shall I say. So.
And that's when I think we're going to see more of the same. I don't believe so. That's kind of like however you've been analyzing numbers and breaking down numbers right now, I think is how you need to continue to break them down and how it's going to continue to look. I mean, I just don't, because even if it went a half a point down, that's not affecting your numbers on running the rates. I mean, running your numbers and your diligence on your property.
Yeah, I agree with that. That's kind of good and kind of bad. I mean, in the sense of like, it's good because it's like, hey, you can kind of project out for the next couple of years what your deals are going to look like and kind of how you're going to do it. Yeah. It's bad because it's not as great as it has been in the past, but that's okay. Because there's going to be opportunities again.
I think the quicker that if buyers are listening right now and you've been buying for 4 or 5 years, I think the quicker we all realize that it's not going to get back down to 3.5% again, the better. Like
I got over that hurdle myself in last summer.
Yeah,
it took 9 months. You get that gut punch. take the wind out of you, but then you're like, okay, I get back up. You take, that punch in the face, and then you get back up and go, okay, I'm still alive,
Right. That feeling after a car wreck. Oh, checking all your your limbs and your vitals.
And you're okay.
We made it through that interest rate.
Brace for impact. Made it through, and then you got out. And so I like you, man, you were more active last year personally in your investment properties towards the end of the year than you have ever been. And I got back on, and have had 2 deals in first quarter.
So, have you?
Yeah, I bought 2 properties.
That's what I mean. It's working.
Yeah.
I mean, you can find things that work. We're good thing. I'll just go ahead and go through. That's a good segue to our brokerage numbers, and then I'll get to what products are selling. But numbers for quarter 1 for the brokerage here, they'll give you an idea of like an investment sales person. Like all I focus on is that, so you can get an idea of what's been selling. For the first 3 months of this year, we had 58 closings.
Congrats.
Yep, thank you. And $5.8 million, $5.75 million in volume. So there's properties that are selling. They're all 150 or less, pretty much.
Yes.
The $75,000 to $150,000 price range is kind of what you're able to make happen with an interest rate.
Yep.
Of where we're at now. So that's
seeing those. I don't
know what everyone. That's a lot of houses still in a market. It's 20. That's almost 20
a month. I did the quick math of at $6 million, 60 houses. That's 20 a month. Yeah. 22 business days. Essentially a deal a day. Yeah. That you're doing. Yeah. That you're helping people buy.
Yeah. So it's there. I mean,
and that's just you. I mean, you again. We've talked about before. Yeah. You're the best agent in Memphis. You were literally the best agent in Memphis last year. Number 1 volume. Number 1 transactions. Yeah. So. Not everybody's you. So not every agent is doing what you're doing, but other agents are out there. So this isn't just an anomaly of one guy selling houses. This is like 20, there's a market of.
If I'm doing 20, there's 120 selling every month at least.
Oh yeah, and not to mention other houses. I was going to say not to mention other houses and other things happening in the market.
Yeah. So that's great. So the numbers are going really good for quarter 1. Now the product, what of those? What has been selling? You
just said it.
It's the 1% rule.
It's exactly dominating. The $75,000 to $150,000. That's about with your rehab. Yeah, is in that $750 to $1,500 rental range.
And dominating. I don't mean like it's so fun. I know why. If you guys have been listening, you're faithful listeners. Last year, all you heard me talk about was Burr. I'm being Burred to death. I got 10 Burrs every time you turn around. I've got available Burr properties to sell. It's the investors that bought them, and they're coming back at the 1% rule and selling them again.
And I went and did the math, and with a typical 20% down payment, I think the 1%ers cash flow.
They do at your 8% interest rate. They do, right?
That's right. Yeah. So I think that's why it's settled out. It's like, hey, a 1%er in this price range with this interest rate environment works, and that's why.
We just did the podcast on it. I mean, we did
on the 1%er where we talked a little bit about that 1%.
Weeks ago, we did it. But that's what's working and that's what's selling. Are you going to retire off of one of those? No. But if you build a portfolio of those, you are. Yeah. I'm here to tell you. And as the rates come down, you can refi. As the market rent goes up. I mean, I said this and I don't say it often, but all those houses you talked about me buying last year, I bought a bunch of them at like 8.75%, 9%.
Yeah.
And that's awful, right? I'm almost embarrassed to say it, but here's the flip side of that coin. In the next year or so, when we get back down to that interest rate that's tolerable, all I'm going to do is refinance those back out. My cash flow goes back up. But the catch is I'm not going to be able to get those $80,000 houses again that need $25,000 in work that are worth $140,000.
Then you're going to be paying $140,000.
And be paying $140,000 for them. So those 1% rules, the Burr's coming. The Burr is still, I'm still getting some of those. I still see some of Burr properties, but the 1% rule is dominating right now, and they look great. So if you're out there and you say, hey man, I'm an out-of-state investor, I don't really feel comfortable right away, which if you also heard me say, if an investor comes in and asks, what should I do? Yes. I tell you not to Burr first.
That's right. Yeah.
My advice is not to Burr first. I always say, come in and get 1 or 2 of these easy homes, mailbox money, get to know me, get to know the title company, CrestCore Property Management, get to know everybody that you're working with.
Yes.
And then maybe if you want to take a little chance on a Burr, we can. So that's a little bit about the market. Let's see. I'm seeing deals, mortgages be accepted. I mean, I am working now probably a 50,
financing contingency.
Yep. they're taking them.
Yeah.
So we have shifted from there. Last year,
all cash.
No one wanted it for. This year, it's like, okay, we're willing to look at a loan. So as of last year, I was probably 90% cash, 10% loans. I'm probably 50-50 now.
Okay.
So we've shifted it back. So if you were out there and you've been on the sidelines because you don't have the cash, that's okay. Loans are now starting to work.
And buyers will wait.
Yeah.
Excuse me. Sellers will wait. Sellers will work with you. Sellers will accept offers with financing contingency.
Especially if they get their number.
Oh.
You see how things have shifted a little bit?
Yeah. Your price, my terms.
That might be the next podcast because I tell you that is more relevant now than it has been. It's beginning to shift. I'm not seeing owner finance, so I'm getting more and more of those calls, and I respect that thought process and that hustle. But sellers are getting their prices. They're getting them whenever they can't get them, and buyers across the board can't qualify for anything, or the market's tanked or whatever. And now maybe some owner finance is relevant. I'm just not seeing any of that get accepted. Just guys don't have to do it. So anything else on the market update? Q1 2024 market update. Do you have anything else to add?
I mean, I think what you just said, I think you're seeing some, thinking about wholesalers that we've talked to. I mean, you're seeing there who've been active, motivated sellers.
Yeah.
I mean, there are motivated sellers out there.
Yes. Yeah.
I've also noticed that I just personally, and then I've been looking, I've seen more for sale signs in yards since COVID.
You mean just as you're driving around?
Just as I'm driving around.
More. Mm-hmm.
Yeah. Which I think is more signs of a more healthy market.
For sure. There's more confidence in sellers that they're going to get their number. There's more confidence that they can sell the home and move it. Yeah, absolutely.
And it's better for buyers because as the houses, there's more houses on the market. They sit a little longer. And guess what? Sellers will take financing contingency. So I think it's just a healthier, quote, more normal market because we sat here and talked about that pendulum swinging. Man. And it had swung to a seller's market.
Yes.
During COVID.
Yeah, big time.
And so it's kind of, I would say, it seems to me that if you're thinking about a pendulum swinging, it is in that third, if you have a third here, and it's a third of like, okay, it's to neither person's advantage. It's like a good, healthy market where a buyer can transact with the seller and the seller can get what they want and the buyer can get what they want.
Don't you know in deals, and I've been doing this a long time, but in deals where both sides are a little, that's a great deal.
Yes.
If both parties are a little, like when you in the process and you've signed everything and you're done, if both sides of the coin are like, all right, let's go, then I think you've done a good job in representing both sides and helping them get to the best that they can. If you got one side celebrating and the other side crying,
that's not that's not
what you want.
Sustainable.
But if you've got both sides kind of like, all right, let's just keep moving, then that's a good deal for everybody. And I think we're seeing more of that. In 2022 and 23, it was one side celebrating, the other side crying, right?
Yes.
We were doing a whole lot of that. Now, I do believe we got a little bit more of when a deal's done, it's all right, let's just keep moving. There to me is that's that pocket of healthiness in our market. It's both sides can get a deal done. I will tell you this too. It opens the door for a little bit more. It opens up the door for more for the importance on your agent. Yes. And the importance on the people that you work with to negotiate
deals and to represent you.
Yeah. So you're in that, if it's on one side, the interest rate's 2%.
It sells itself.
Then we're just taking orders.
Correct.
If it's on the other side and the interest rate's 12, there's nothing happening anyway. So we got to start, But in that middle, you don't need negotiations on both sides of that because it doesn't. For the obvious reasons. But we're right here in that middle part where you can get a deal. Your influence from your agent can be a little bit stronger than normal.
Yes.
And I think that's where I can help my clients.
Yeah,
I think that part of it's where I can really shine. I'm honest to say that when the interest rate's 2.5%, we're just kind of making sure nothing goes wrong.
Right. And buyers, it's easy for buyers like it was post the recession. It's buyers, easy. Yeah. And COVID, sell, easy. This point is what you said. Hey, I'm noticing seller concessions. I'm noticing sellers accepting financing contingencies. You can provide a lot of wisdom and advice, and that's good. So it's my observation is it's a nice market right now, and that you can go kind of like we said and
get a deal,
find
done.
some deals.
That's right.
Yeah.
So I'm happy with where we're at right now. I'm looking forward to Q2. I think we're going to see more of the same, but we'll be reporting back in June, at the end of June and July, as we get into the heat of the summer.
Yeah, man.
So we'll report back. Anything else?
No, that's great.
Guys, thank you for tuning in. We'll be back here next week, and I think next week we're going to talk about how you can retire early. So
sign me up.
That's right. Thanks, guys.